One of the biggest reasons people quit passive income is not because it doesn't work. It's because their expectations are completely wrong. Most people don't fail due to lack of effort. They fail because they expect results too fast. In this video, we're going to break down how long passive income actually takes to work. Not the fantasy timelines. Realistic timelines. We'll look at dividend investing, real estate, and digital products, and talk honestly about when you can expect your first dollar, your first $1,000 per month, and meaningful long-term income. If you're serious about building passive income, this is one of the most important videos you can watch. Let's start by clearing up a misconception. Passive income does not mean instant income. It means delayed gratification. Almost every legitimate passive income stream requires a period of time where you put in effort, money, or both, without seeing immediate results. The people who succeed understand this going in. The people who quit usually don't. Now let's talk timelines, starting with dividend investing. Dividend investing is one of the most predictable passive income strategies, which also means it is one of the slowest at the beginning. When you invest in dividend-paying stocks or funds, your income is directly tied to how much capital you invest. There is no shortcut around this. In year one, most beginners see very little dividend income. If you invest a few $1,000s, your dividends might only cover a coffee or a subscription. This is normal. Years 2 through 5 are where compounding begins to show. As dividends are reinvested, your share count increases. As your contributions continue, your base grows. However, even after 5 years, most people are not living off dividend income alone unless they invested aggressively or started with significant capital. For most people, dividend investing becomes meaningful after 10 or more years. That's when portfolios reach a size where monthly income becomes noticeable and reliable. Dividend investing is best thought of as a long-term wealth engine, not a short-term income solution. Now let's talk about real estate timelines. Real estate has the potential to produce income much faster than dividends, but it comes with higher complexity and risk. The first timeline hurdle in real estate is acquisition. It can take months or even years to save for a down payment, improve credit, and find the right property. Once you purchase a rental property, cash flow may begin immediately. However, early cash flow is often inconsistent. The first 1 to 2 years usually involve repairs, tenant turnover, and unexpected expenses. This is the learning phase. Years 3 through 5 are where real estate often stabilizes. Vacancies become less stressful. Repairs become more predictable. Rent increases may improve cash flow. For many investors, meaningful monthly cash flow from real estate takes 3 to 5 years per property. Scaling to multiple properties extends that timeline further, but increases long-term income significantly. Real estate can accelerate passive income, but it requires patience, capital, and management tolerance. Now let's talk about digital products, which have a very different timeline. Digital products feel slow at the beginning because there is no immediate payoff. You create content. You build an audience. You get very little feedback at first. For most people, the first 3 months feel discouraging. Views are low. Sales are minimal or non-existent. Months 4 through 6 are where momentum begins. Content compounds. Search traffic starts to appear. Audience trust starts to form. The first sale often feels small, but it's a signal that the system works. Months 6 through 12 are where digital products can surprise people. A single video or post can suddenly gain traction. Email lists grow. Products sell while you sleep. Unlike dividends or real estate, digital products scale non-linearly. Growth is not steady. It comes in waves. For many creators, meaningful income appears between 6 and 12 months, assuming consistent effort and quality. Now here's the key comparison most people miss. Dividend investing is slow but stable. Real estate is faster but complex. Digital products are unpredictable but scalable. Each strategy rewards a different strength. Dividend investing rewards patience and capital. Real estate rewards systems and management. Digital products reward consistency and communication. The mistake is assuming that one of these should work instantly. Here's a realistic passive income timeline for most beginners. The first 3 months are about learning and building. The next 6 months are about consistency. The first year is about proving the model. Years 2 and 3 are about scaling. Years 5 and beyond are about optimization and freedom. If someone promises passive income in weeks, they are selling you a shortcut, not a system. The people who win are the ones who stay long enough for compounding to take effect. This channel exists to set realistic expectations, because realistic expectations lead to consistent action, and consistent action leads to passive income. In the next video, we'll break down how much money you actually need to get started with each passive income strategy, because starting points matter just as much as timelines. If you want honest, realistic passive income breakdowns, subscribe to Passive Income Playbook, and comment below how long you're willing to commit before expecting results.